Welcome to the Company Value Investor channel. In today's video, we are going to analyze the Overstock.com corporation. We are going to use fundamental and technical analysis on both the short term and long term to review the stock and the company. Fundamental analysis meaning using the financial statements such as the income statement, balance sheet, and cash flow statement. We are also going to use technical analysis by focusing on the most popular indicators to gauge the price movement so that we can make the best possible purchases of that stock. By using both the fundamental analysis and the technical analysis, my goal is to help you, the average investor, come up with a good value for your stock purchases. At the same time, I want you to be able to focus on the value of the company. The way you're going to know if the information is good is through 5 questions. The whole purpose of the video is to answer these 5 questions, and that's the what, when, where, why, and how. What makes this company profitable or grow? When is the best time to buy this stock? Where does the profits come from for this company? And why is the stock undervalued or overvalued? And last but not least, the how is the future outlook of this stock? We are also going to cover to some respect the purchases of stock options, mainly concentrating on selling puts. I'm a big believer in making money via different avenues. In the stock market, there are many different ways to make money. Selling options is another. If you like the video, please subscribe, tap the bell, and share it. If you have any questions at the end regarding anything, please put them in the comments. Throughout the video, I'm going to throw out a couple of phrases. One of them is always cash is king. Another one might be a dollar today is worth more than a dollar tomorrow. And the most popular one is buy low, sell high. The reason why I'm going to throw out these statements or quotations is so that I'm trying to make a point, so I can make a point so that it'll be easier for the individual to grasp the concept of what I'm trying to explain or show. Okay, so the first thing I want to explain is my program. This program it's made from a Google spreadsheet. I really like the Google products. They're very powerful. I've done similar programs in other platforms such as our program, but I really like Google because Google Spreadsheets is live, is fast, and it's just as good as any other spreadsheet. I've also done similar programs in Excel, Power Query, Power BI, Tableau. Anyways, the whole power of this program is the selection of different stocks. I make my selection, it picks up the information, and there is a lot of information. I will try to go as slow as I can, but I do want to cover a lot of things. So with that being said, let's get started. So currently, August the 19th at 9 o'clock in the morning, the Overstock ticker symbol is OSTK. It is selling at $124.50. Let's go to the indicators. Okay, so here we have your most popular indicators. We are going to focus on the technical analysis first, and then the options, and then the fundamentals. As it pertains to the indicators, the first one is the RSI, relative strength indicator. It's at 87. So whenever you see red, for me, this is a color code that tells me that it's selling very high. And if it's green, it's selling really low. Basically, it's a visual helper for me. So the RSI for the Overstock is at 87. 87 is telling me that investors are buying. If I had this stock, I would sell it right now. Stochastic indicator shows an 86. Again, it's telling me the same thing. Most of the indicators tell you the same thing in different ways, which is why I like using them. This giving me an 86. Investors are buying. The Elder Ray is telling me that the bulls are buying, and the bears are selling at 18. Bulls are selling at 32. Again, investors are buying. The Williams R is at -6. It's telling me the same thing. Sell. Investors are buying. The PSAR is rising at 124. It should be around. The stop and reverse would be at 87. Again, we got Bollinger Bands, linear regression, and channels. These three basically tell you the same thing. So based on these indicators, everything is telling me to sell. It's at its highest point. Here we have a short-term, I don't want to say mini program, but it basically helps me if I was buying on a very short-term basis. I would use this this little program to basically, or this table to basically make my decision. For example, it gives me the price, the date, the volume, and as soon as it gets updated, it'll tell me basically if the trend is going up. Very short term. So it'll tell me if the trend is going up and the outcome. I've used it before. I like it, but however, it's focused only on maybe weekly, on a weekly basis. One of my favorite indicators is the Ichimoku Clouds. Again, as you can see, they are all in red. They are all telling me to sell. Why would I sell? Because it's at its highest point. Remember, buy low, sell high. The reason why you want to sell high is because I'm assuming that you made a profit. You want to focus on buying low. Let me give you a description of the Ichimoku Clouds. So basically, it has a couple of lines. The price, 124.50, is above all these lines here. The 9-day average, the 26-day average. We have the fast lane, the slow line. Basically, what it's telling me is that it's so high, above that I should really sell. Remember, everything in red means sell. Let's move on to another indicator. Here we have the resistance lines. Again, they're telling me the same thing. Everything in red is an uptrend. It's telling me that it's an uptrend. This here is more of a mid-range, meaning a monthly indicator. The uptrend will continue. The uptrend started at $45. It was confirmed at $87. So the uptrend started somewhere in the mid-July, July 22nd, and it was confirmed on August the 5th. So according to the resistance lines, we still, as long as it keeps going up, we're happy, or you should be happy if you own the stock. But the confirmation of the uptrend was verified by the price when it reached $87. So somewhere around, I want to say, August the 6th. It was confirmed August the 7th. And so right now, August the 19th is at $124. Now, when the stock hits $88 and it starts to go down, when you see it drop to $88, a downtrend will start to occur. And that downtrend is going to be confirmed when the stock hits $84. I hope that makes sense. So once, let's just say that in next week the stock hits $88 and then midweek it hits $83. That, because the stock hit the or crossed under the $84 price range, that automatically converts it into a, not automatically, but it'll show you or advise you or provide you with the information that the downtrend is about to occur or is occurring. If that's the case, the best thing to do is to sell the stock. Okay. Now let's go. There's so many things in this program that I'm going to show you that is going to take time. The reason why it's set up this way is because it's comfortable for me. I created this program from scratch and I set up everything the way I like it, the way it helps me analyze and make purchases on the stock and value companies. Here we have the VIX. Currently is at 2156. Now, this is my favorite indicator. Well, the Ichimoku Clouds is my favorite, but this is my second favorite, the MACD. Now, for the weekly MACD, it's telling me that it's still a good buy. Unless I hit one of these exit trades, which is red, that's the time to sell. Let me tell you a little story about this stock. I purchased this stock when it was $7, right around here. Sometime, around here. Sometime in the beginning of the year. Yeah, but the beginning of the year. I purchased it for $7, and I sold it in mid-February for about $10. I figured the stock wasn't going to go anywhere, and then the crash came mid-March, and it brought it down to $3. The reason why I'm doing this video is to show the individual investor that you don't need a lot of money to be profitable. You don't need to invest a lot of money to be profitable. Most of us cannot afford to buy 100 shares of Tesla. It's so expensive. But we can afford to buy this type of stock for, let's say, $7 or even $3. And within a matter of days, it went up to a matter of weeks. It went up to $103. Right now it's $124. Okay, so the whole purpose of selecting this company, the Overstock company.com, is to show the individual investor that you can make money. Now, the reason why I sold it, because I honestly, when I did the analysis, I never saw, that was before the crash, I never saw it going more than $15. And we'll do the fundamental analysis in a little bit. I never saw it go above $15. But it turns out after the crash and COVID, it's gotten up to over $100. Had I kept it, those 1,000 shares that I bought for $7 would have been easily over $100,000. But you learn from your mistakes, I guess. But in my defense, I made a few $100s. I was happy. And that's the whole point, is to be able to make money in different ways. Every now and then you will get lucky and be able to make a lot of money on a good purchase. Now, if I had the stock right now, I would sell it because all the indicators are telling me to sell it. And I've already, at some point, everything is going to reach a plateau. And I believe that the reason why this, and we'll do the analysis, the reason why it's so high is because it's more of a hype. People are buying, trying to make $1, more than the other people. They're not buying for the value of the company. They're buying because they think or they believe that the price is going to keep going higher and higher. Let's look at the daily MACD. I always focus on the weekly MACD because it's a better indicator. Okay, so again, the way that I have this set up for the MACD is easier than trying to read all those lines and all those charts. It basically tells me, and it gives me the price to enter. For example, if I did not know anything about Overstock and I saw it and I figured, okay, it's going to be a good stock. The way that I have it set up tells me, okay, on June 22nd, enter the trade. I would have to pay $27.38, but that's the cost, the price, the cost of the share. But it's telling me enter the trade. Had I bought it on June the 4th, it basically tells me when to sell too. It's a very visual way of telling me how and when to exit and enter the trades and the price that I should be looking at. So it's a very good indicator. It's more of a trend indicator than anything. But again, I always revert back to the weekly because the daily can have bumps. Any good news or bad news on a daily basis will make the stock go up and down. And remember, what is it? The beginning of the year, this stock was worth maybe $7. The price was $7. 8 months later, that's over 1,000% increase. So anyone can make money if you take the time, and with a little bit of luck, you can make a lot of money. You can also lose money. Remember, investing is not. It's not. I don't want to say it's not a good way of making money. It's a risk. It's speculating. Even if you do the analysis and you're sure about everything, at some point it's still a risk and you're still speculating. Sometimes you'll be lucky and make some good money on speculation. That covers the technical analysis section. Now let's go to the options. The options. Okay, so how would I make money selling this stock? After we've done our technical analysis, we know that the price, we know that everything, all the indicators are telling us to sell. The MACD is telling us that it's still going to continue to go higher. And everything's going good for this stock. Everything looks really good. So let's just say I'm into options, and we're only going to focus on selling puts because options can be a little tricky. And if you have questions, I can recommend individuals that are experts, meaning videos on YouTube. I have no affiliation with anybody. I do this on my own for your information. So let's just say that I want to sell a put, right? The price right now is 126. So, well, let me explain how it works a little bit. So up here gives me the winning probabilities of selling the option. Here I select the price that I want, the strike price that I want to enter this transaction. This section here will tell me the amount that I will receive based on the bid and the ask, and it'll give me a percentage for that period and a daily amount. I'm under the assumption that I will buy or sell one option, one put. That's 100 shares, and the total cost would be $12,000. And this is for the margin requirement. We'll leave that for another day if people have questions. Okay, so the option date for the 21st, that's 2 days from now. If I was to sell it at 110, I would make $68 with a 0.87% return. Now let's say that I want my odds to, or I want to make a little more money. The price is at 126, so let me go to 115. As soon as I select this strike price, my probability of making money or winning on this trade is 85%, which is still very good. My goal is 80%. Okay, at 80% is 116. If I was to sell this at 115, I would make $225. Okay, and I would make almost a 2% return for 2 days, and that has to do a lot with time decay. Like I said, if people have questions, I will refer you to individuals that can explain it better or that have written books on it, or but I will help you. So on a daily basis, in the next 2 days, I will make $140. And let's just say that because I'm looking at my indicators and the MACD at both the daily and the weekly are telling me that it's going to continue high, let's just say that I'm going to go to 120, the max. I got 2 days. I know I really believe that it's going to continue going until Monday morning. By Friday, on the 21st, when the market closes, the transaction, everything closes. If the stock is over 120, then the contract expires and I keep $350. That's how much I would get for this option. 350. I would make almost a 3% return for how much? Investing $12,000 for how many days? 2 days. Not bad if you're able to work and make it benefit you. But basically, to sum it up, this is how you sell puts. You can make a lot of money. I do not recommend doing it on margin, because on margin accounts, although you have access to more money, it could be a little tricky. But it's all up to the individual. I don't see anything wrong with margin accounts. It's all up to the individual. And again, it is very easy to make money if you take the time to do the analysis. I've used many different programs in the past when it comes to investing, E-Trade, TD Ameritrade, even the banks, and their systems do not provide half of, I'm not selling anything, half of the functionality that my program does. The reason why I like my program is because I'm able to do 10, 20 different things simultaneously, and everything is right here and everything is live. It might be a few minutes lagging because some of the information comes from Yahoo Finance, Morningstar, Google. I mean, I love all these companies that provide the service for free. Okay, so now that we've done the options section, let's get to the nitty-gritty of valuing a company. Okay, so now we're going to the fundamentals analysis section. This is where we analyze the company to see if it's actually a good company using the financial statements. Now, because of the accounting aspect, there's only certain things, certain sections that I pay attention when it comes to the financials. But overall, I think the financial statements provide me, or the individual analyzing, a very good outlook of the past and the future if everything stays as it is. Okay, so believe it or not, this little section here controls the entire section, and we'll go step by step. Okay, so this section here is dedicated to analyzing to analyzing the stock and the company. So let's start with the years. Okay, 2019. So in 2019, the information is up here. It comes directly from the financial statements. This is what the Overstock Corporation had for the year 2019. So they had positive total revenue. They had negative net income, and they had negative cash flows. Okay, so this is current as of today at 9/23. Currently, the shares outstanding is 42. I am not going to go over for 42 million or billion. I'll just say the first number that appears because it's easier. And the price to book is 30. The earnings per share, the PE ratios there, the book value, and the market price. The earning power is 6%. This here at the bottom tells me the current movement of the shares for this stock. For example, out of the 42 billion shares that are out there, there's a 17% movement, and 549% of those 17% are buyers and sellers, which coincides with the elder ray indicator. So again, let's analyze 2019. Again, the current prices here. This is the current information for quarter 3. We are in quarter 3 2020 for the company. Okay, we'll get back to this in a little bit. I want to do the analysis. Well, let's do it. Let's do it right now. Quarter 3 says, based on everything, that the average share price was at $65. The earnings per share, the EPS, is at 850. The PE is at 768 with an earning power of 13%. This is good earning power. Okay. The current price is $126. It went up a few dollars since the beginning of the video, which makes this stock above the quarterly average of $61.40. So this stock is going up and up. Okay, let's focus on the analysis for 2019. So in 2019, this year's all 2019 information. In 2019, the value of this share was $52. The actual value, the valuation amount that I'm giving it is $52. The average share price was $14. Earnings per share was $18, and PE was 0.77, with an earning power of 130%. Very good earning power. Again, when we compare it to live, and all this program works on live information. When we compare it to live information, when comparing the current price to the average of 2019, it was undervalued by $37.76. Okay, let's get to the nitty-gritty here. So the most important things that I believe should be focused on when it comes to analyze a company are right here. First, the first section for 2019, we'll look at operations. This company sells. It doesn't provide a service. It's not a banking institution. It sells. So most of the money, if you're a good company, you are going to produce most of your money through operations. 2016 positive, 2017 negative, 2018 negative, and 2019 negative. Investing. Here we have the current versus the prior. For example, 2019 versus 2018. There was a 41% increase, and so on. Investing, negative, 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 negative. Financing, positive, 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 positive. Again, this is not a banking institution. This company makes money by making and selling things through operations. In these last 4 years, all their money, according to them, has been made through financing. Okay, let's take it a step further. Revenue. They've had good, decent revenue throughout, steady revenue, even though they had a 20% decrease from the prior year. They still had a relatively solid revenue. Now, this is where it becomes an issue. The shares that they sold, okay? So in 2016, they had 25, 25, 32, and 76. Okay, they had almost 140% increase from year to year. That is a lot of money, and they didn't make money from their financials. They did not make money from operations. They made money through selling their shares. So as this money comes in, you're able to distribute the money to your different financial accounts, which makes you look like a very good company. Now, I'm not saying this is not a good company. I'm saying that they made their money through selling shares. Now let's look at their cash accounts. Okay. 183, 203, 141, 122, a negative of 13% year over year. Okay. So we can establish, based on their information, which is public information, again, through Yahoo, Google, Morningstar, or even Edgar, the SEC. You can get that information through the 10K and all that. And if people have questions or would like more information, ask it in the comments, and I will be able to provide you with a good information, or I will point you to the individuals that might be able to explain it better than I can. Okay, let's continue. Now we have the return on invested capital. Okay, so other than 2016, they were negative. So they weren't really making money on their operations. Earning power is good. Earning power is really good. That's because they had a good cash. Now let's get back to the bottom. For 2019, the cash asset per share. So based on $125 and all the information that they have, all their statements, they were negative. Current asset per share. Okay, so to me, this is very important, because let's just say the company went bankrupt, right? How much money or how valuable is this company after it gets liquidated? Based on the price of $125, it's not very profitable. Let's look at the book value per share. Book value, and this is their information, like 2666. Liquidating value per share. So again, if the company was to go belly up and it was liquidated, the most you would get per share is $1.39. So what this is telling me is that one is on the yearly basis, on the yearly analysis of the company, it's telling me that the company made its money through selling shares, not operations, and based on the value, if it was to be liquidated, I wouldn't get very much money for my $125 investment if I was to buy this company at $125. Remember, buy low, sell high. If I had this stock, if I still had this stock, I would have sold it by now. Buy low, sell high. Remember also, cash is king. Okay, so let's do the quarterly information. Let's do quarter 2. Okay, I don't think I mentioned this. This up here, this dashboard up here, is a quick analysis that tells me if a company it rates the company based on its financials, but it does not go into detail. For example, it's telling me that in quarter 2 2020, this company is valuable. And it gives me all the information, the cash in hand, external funding required, economic earnings, the amount that they really made, the amount expected, and the cost of capital and the rate of return. Very good numbers. That's why it's giving me a 3 stars. So for quarter number 2, again, the numbers are here. We have 782 total revenue, positive income, and positive net cash, net flows. So that's one of the reasons. There's several reasons, but that's one of the reasons why it's telling me that it's a valuable company in quarter 2. Let's, again, you know the information here is current. Let's do the analysis for quarter 2. Now all this information for quarter 2, we've done the yearly analysis. Let's do the quarterly analysis now. Now the value of each share, the value should be, in my estimation, $127, which is close to $125. The average share price was $15, believe it or not, because the boom didn't happen after the crash of March and the beginning of COVID. That's when, let's look at it again. Look, everything at one point it was worth $3. Everything happened here. Everything happened over here. As soon as it hit what? What was it? Yeah, as soon as that hit sometime in the beginning of quarter 3, it just started going off. Let's get back to this analysis. So the earnings per share is 19, PE ratio is 0.82, earning power is 122. In quarter 2, the stock, based on quarter 2's information, which is $15, the average price, the price was undervalued by over $100, based on the current price right now. If you see it in gold, that means it's good. These two, the color code gold they're golden, and silver is silver. It means that it's below. Okay, so let's go back. Quarter 2. Quarter by quarter operations, negative, positive, negative, positive. Okay. And then investing, negative, negative, negative. Financing, negative, positive, positive, negative. We have a negative 3, positive 34, positive 47, and negative 3, respectively. Revenue, again, they've had pretty good revenue until quarter 2. It went, revenue increased by 122%. By 122% from quarter to quarter. And cash also increased by 125%. Positive, positive. Okay. So let's look at why. The question is, what makes this company profitable, and where did it get, or how did it make its profits? It made its money from sales for quarter 2. Unlike year to year, where they made their money from selling shares, in quarter number 2, their sales, which is what they do, skyrocketed to over 1,500% increase quarter over quarter. So this COVID was a blessing. The COVID-19 was a blessing for this company because they just started selling a lot of their products. Let's look at the shares. Okay, the reason why they had a positive 7 here of through operations is not because it's mainly because they sold a lot of their shares. They have 76, 35, 40, and 40. So here definitely tells me that their sales went up, they sold a lot, and most of their money came from selling, which is what they do. So this is one of the reasons why the program is telling me, or the number here is telling me that it's a very valuable company. Quarter two. We'll do other quarters so you can see if that is the case. Okay, so let's finish off here with the return on invested capital, 11%. Very good. Earning power, 120. Very good. Now, again, with all that being said, the cash asset value is -1. The current asset per share is 65 cents. Book value is $5. If we were to close, or this company was to go belly up, the value per share is only $3. Only $3. Okay. With that being said, let's analyze a few more quarter. Let's do quarter one. You see how it's not valuable at all because of the numbers. Everything is interlinked. So here we have quarter one. Most of their money in quarter one, most of their cash, actually they had no revenue from operations. Came from financing, selling the shares. Remember, this company sells items. It does not sell services. It sells actual physical tangible assets. Okay, let's do quarter four, again negative. These are all the numbers here. All the information comes from the financial statements, so we understand why and how this company got the money. So let's ask the questions again. What makes this company profitable? Well, the only profitable quarter that they had is in quarter two. Let's try other years. Okay, we know 2019 was a horrible year. We did the analysis. Let's try 2018. Again, negative, no value. If everything here is red, that means it has really no value, and they're either 27. They had 4 stars, but again, in 2017, let's look at 2017. They had no value, yet they received 4 stars. Okay, so let's look at 2017. Okay, year over year, they again, they had no negative 35 for their operations. Oh, okay, so I see. Revenue. They had a good year, but they weren't valuable. They basically, although they had 4 stars, at the end of the day, they had no real value. You can see it right away. They had, good revenue here, but negative income. Remember, cash is king. If you're not making money, the whole purpose of going into business is to make money. And $1 today is worth more than $1 tomorrow. If you're not making money, you're not profitable. But the numbers look good as a whole. But at the end of the day, they really didn't have any value. They were not valuable. Okay. So let's go back 2019. Let's stay with a quarter so that we can the most current information, because right now it is valuable. Okay, with that being said, this is quarter three. This is the current price. This is quarter two. Okay. Quarter two, very profitable. They made a lot of money. Again, if they were liquidated, you would only get $3 for your $124 investment. Now, let's take it a step further. We know what makes this company profitable. The fact that they were able to increase over 1,000% their sales in quarter two. That made them profitable. That made them a good company. That made their stock, as soon as they accumulated all that cash and they started, the operations just skyrocketed. That made him a very attractive stock. And that's what people were doing. They were just buying, buying, buying. And so now it's a hot stock. It went from $7 to $125 in a couple of weeks, a couple of months. Now, when was the best time to buy this stock? The best time was during the crash, $3 a few months ago, or even at, let's look at the weekly. Yeah, the best time to buy this stock was around April, the beginning of April, mid-April, for $7. Had you entered the trade, had you bought the stocks, you would have made a lot of money. Question number 3, where do profits come from? Well, we know where the profits came from for quarter 2. The rest of the time, for the other years, most of the profits or most of the cash came via the sale of shares. Why is the stock undervalued or overvalued? Well, right now, the stock is overvalued because my estimations show me that people are just buying the stock because they want to make more than the next person. It's not because it's a valuable company. Quarter 2, very valuable. Very valuable. But the other quarters and the other years, at best, subpar. A lot of negative numbers. A lot of their cash flow came from financing. And the last question is, how is the future outlook of this stock? Okay, let's look at the future. Let's look at price estimations or price estimations or speculations, whatever term you like using. People don't like using price speculation, but it is. The estimations are speculations of the future. No one really knows if the stock is going to plateau at 125, 130 and then drop down. But based on our analysis, I don't think it's going to go any more than 130, and then once it reaches that plateau, the point of diminishing returns will kick in, and by then you will see that the price will go down. So the current price should be, based on my estimation, around $34. So even at $34, it's still a good buy. However, it is a 72% decrease from the current price. $34. What does that put you? $34 would put you the beginning of July. $34. Okay. On a short-term basis, meaning a year or less, the price should be approximately $82, not $125 or $124.84. If you were to buy it at this price, you would lose about 30% of your purchase price. On the long-term basis, meaning over 8 years, maybe 10 years, over 8 years, the price, if it keeps up with the operations and hopefully continues to make money, be profitable, the long-term price should be around $221, an increase of 77% from today. Everything is based, the whole system, the whole program, the whole entire analysis, although we're doing, past, it's based on today's information as well, meaning what's happening right now. It's live. $124, everything's based on that. So for the long term, if you really want to buy this stock, I would wait until it hits a dip, buy it at around $34, $35 a share, hold it for the next 8-10 years, and it will reach, if it continues doing what it's doing, $221 a share. With that being said, I think this wraps up the analysis of the Overstock.com Corporation. It is a good second quarter. The third quarter also looks promising, but again, I think that the actual price for this stock should be around in the mid 30s, $34.56. The whole point of making this video was to show the individual investor, the average investor, that even a stock that's $3, $7, $30 can go up to 100. You can make an unlimited amount if the conditions are right. For this stock, although we did the analysis and the conclusion is throughout the years, most of their money was made through financing, sales of shares, not operations. It shows that anything can trigger a massive incline. For, in this case, the COVID. People just started buying the operations. Now, I'm not reading this. I don't know for sure that's what happened. I'm just looking at it through common sense and the financials, the fundamental analysis of this corporation. And again, all the information regarding the financials, it's free out there. You can get it through, again, Yahoo, Google, Morningstar, through Edgar, to the SEC. There's a lot of good information. I hope this video was helpful. If you have any questions, please do not hesitate to leave them on the comments, or you can email me. I will put the email under the description. Take the time and subscribe. If you got a benefit from it, comment. Hopefully it's good. If it's bad, put it in there. If you believe I made a mistake or I spoke incorrectly, please again help me by putting it out there, and tap the bell to get further notifications. I will try to make a video like analyze a company every at least once a week. Again, I will try. If I get enough responses, or if anyone wants me to do a individual company, say Apple or whatever company, if I get a request, I will do it. I will focus on smaller denomination companies, meaning that the cheaper or the less expensive the price per share is my focal point, because I'm focusing on individuals that can afford them, not for individuals that want to buy Tesla. I'll do a video and analysis on Tesla if that's what people want. But let me know. Again, let me know. I'm just talking. Let me know, and I will try to do it as soon as I can. I'm trying. I will try to make weekly videos. Again, please take the time, subscribe. Any questions, put them in the comments or email me. The thing that I want to leave is remember, every business is in business to make money. Cash is king. $1 today is worth more than $1 tomorrow. And always, as simplistic as it sounds, buy low, sell high. If I had this stock, I would sell it now. The reason why people are buying it is the hype. Buy low, sell high. I hope this helped you in some way. As always, take care. Have a good day.